All right, good evening, everybody. It is Sunday. It is Father's Day. So happy Father's Day first and foremost to all of the fathers around the world, and especially the fathers who watch the Walks on Wall Street channel. We appreciate it. Hopefully you had a fantastic weekend. Enjoyed it with your family and the extended family and the like. So happy Father's Day, number one. Number two, it is Juneteenth. So happy Juneteenth to everybody. Markets will be closed tomorrow in observance or in observation of Juneteenth. Obviously, because it falls on a Sunday, they will have the observation, in which case not only will fixed income markets be closed, but also the traditional U.S. equity markets will be closed tomorrow. But we will still do our Markets a Look Ahead stream tonight. So we do have a lot to cover. I want to cover a couple things. We are getting major economic data out of the housing market. So we will hear from the National Retailers Association, we'll hear from the Mortgage Bankers Association, and we will also hear from the Consensus or the Census Bureau, in which case they will report new residential home sales for May. So these are not only existing homes, but I think the most important piece of data is looking at new homes, the demand for new homes. So we'll talk about that. We are also going to be talking about a potential reverse wealth effect that could help us out in capping inflation here. And I think it's going to be a good thing to talk about because last night we touched on it briefly. Obviously, we know that the Federal Reserve is getting really aggressive here in raising interest rates. We just got a 75 basis point rate hike, which should help keep a cap on inflation. But there's many economists and portfolio managers on Wall Street that think much of these rate hikes are actually being overdone. So if we look at the data, I believe there's been over $10 trillion in equity wealth wiped off the stock market, which is going to affect people. And there's a lagging effect there. So we may not see that show up in the CPI numbers for maybe a quarter or so. Because as people's valuations of their 401ks and their IRAs and their retirement accounts go down, that probably means that they'll be spending less on things like goods and services. But we'll talk about that tonight. A lot to cover. But first, let's see who we have in the chat on this Father's Day. We have Otto here. Says, hey Tom, good to see you, Otto. Hopefully you're doing well on this Father's Day. Sally is here. Welcome, Sally. Says, hello Tom. Mr. Ming is here. Otto says, Olaf from Colorado. Good to see you, RJ. Michelle Henry says, hey Tom, the one and only ABX girl from the Bronx is here. Always a pleasure. 48 is here. Says, good afternoon, Tom. 48 is joining us from New Zealand. Always a pleasure. NMB 045 says, have a great week ahead, Tom. You as well. Well, technically I'm not off, but many of my clients are off. I think the vast majority of corporate America is off tomorrow. Obviously, those fixed income markets as well as the U.S. equity market is closed tomorrow. So I'm probably going to bet that most of you in the chat have off, I would say, right, for Juneteenth. Sally says, thank you, Tom. It's always good to see you live. Sanjib is here, says, hey, Tom, how are you? I am from Montreal. Sanjib, hopefully you're doing well. Hopefully you're having a good weekend so far, and hopefully it gets better as the night progresses. Andy is here from South Korea. Good to see you, Andy. Hope you're well. We see Chris Beeman from the very hot and dry Arizona. Always good to see you, Chris. Nirvana fan says, hello, people. Lee says, hey, Tom, looks like a beautiful night in New York City. It is. Beautiful night. It's actually a little bit cold again. So it's probably about 62, 63 degrees outside right now. The Investigator says, Walks on Wall Street, good evening. What's up, Investigator? Optimus Prime is here, long time no see. Kim says, hi, beautiful night. Arctic Trend, Tucson says, hello from Arizona. Brooklyn is here, says, hey, Tom. Alan says, hey, y'all, thanks. And Shay29. Good to see everybody. Daryl's here, joining in from Chicago, Illinois. Good to see you, Daryl. Tonight we're going to be walking uptown, but I want to do a quick lap around Soho. We are not going to be live tomorrow, just so everybody knows. Tomorrow we will not be live, so there will be no live stream tomorrow. It's a holiday, federal holiday. I think this is the first year where Juneteenth is observed as a federal holiday. I believe it could have been last year too, but I'm not sure. But in essence, Markets will be closed, fixed income markets will be closed here in the United States, and many of us are off. And tomorrow I will be traveling, so there will be no live stream. I will be in the air. Hopefully my flight will take off on time. You know, we've been talking about this a lot on the streams, that air travel has not been easy this year in 2022. So just wanted to let you guys know that, to be prepared if you do not see a notification from me tomorrow, because I will not be live. I will be traveling. One of the highlights from tonight's stream, everybody, that I think we're going to get into maybe in about 30 minutes as we head uptown, the Empire State Building is going to have an amazing color scheme tonight. I believe it's lit up in red, black, and green for Juneteenth. So it's going to be an amazing color scheme. Color scheme is going to look similar to how it used to look when we would do these live streams during the holidays. So pretty excited for that as we head uptown. I see Edson here, says, hey Tom, what's up? Good to see you. I'm doing well. You know, things are good. Things are looking on the up and up. You know, I was reading a lot of the financial newspapers this weekend, as I usually do. And I've noticed a common theme. Well, a couple things. Number one, I mean, the Wall Street Journal and Barron's specifically, every article was about Bitcoin and cryptocurrencies. Every article. It's like they're obsessed. So we got to keep our eye on that. We're going to talk about Richard Wyckoff. Now, many of you may not know who Richard Wyckoff is, but many of you may know who he is. And I think it's really important during these times of these crazy, exacerbated boom-bust cycles that we understand who Richard Wyckoff is, what he did, and understand the Wyckoff, I guess you could say, accumulation distribution theory, in which case is essentially how markets work and how markets make their moves. You know what, maybe we'll go this way. We haven't been down here in a while. This is actually towards the Bowery. So the reason why I bring up Richard Wyckoff is because he came up with, or essentially, he's the first one who noted or came about the theory about how markets move. So you have 4 distinct phases in a market. Number 1 being the accumulation phase. Number 2 being your markup phase. Number 3 would be your distribution phase. And number 4 would be the markdown phase. So if you could sort of visualize that, and if you want to Google it to try to follow along here on the stream, you could just Google Wyckoff accumulation distribution patterns. But essentially that's how market cycles work. So there's something called a composite operator. Excuse me, I'm actually shivering. That's how cold it is tonight. I'm not used to this. It's like 56 degrees. So there's something in the market, in all markets, by the way, not just specifically exclusive to U.S. equities. This is in the cryptocurrency market, the currency markets, everything. Your composite operator is the institutional investors, the sophisticated investors that control the vast majority of the money, because they can move stock prices and asset prices around. So as we go through this massive bust cycle, not only in the equity market, as we have the NASDAQ down almost 36%, but we're even going through it in an even more exacerbated way in the cryptocurrency market. Now, I believe at the height of the market, there was about a $3 trillion valuation or $3 trillion market cap across the board in a lot of these cryptocurrencies. Now we're under $1 trillion. It's a massive bust, okay? And I think what's going to happen, and what you're going to start to see, you're going to notice a pattern that over the next couple months, weeks and months, every article on the news and the mainstream media, you're going to see these stories about, it was a massive bubble, everything's going to zero. You're going to see stories and documentaries of people who lost so much money, and they're going to be literally almost in tears, and it's going to be so much fear. And that usually marks the start of a brand new market cycle. So right now, this is what you would call the markdown phase of a Wyckoff accumulation distribution pattern, in which case it could take 2 or 3 years for that accumulation phase to undergo. So when things are so fraught with fear, and everybody says everything's going to go to zero, they're saying the same thing in the stock market, over the next year or two, what you'll see if you track price and volume patterns are institutional investors getting in there and slowly accumulating the underlying asset or the underlying security. And the reason why it takes so long is because when you're a large institutional investor, you're not just dealing with a couple $1,000,000, you're talking about billions. So if you're trying to get on a full-size position, it could take you a couple months, right? And if you just slam and market buy, $1 billion or $500 million worth of stock, well, that's going to move the price significantly, right? So you don't want to do that. So what they do is they slowly accumulate while the news is horrible, while there's so much fear spiraling, and then that's right around the time when retail sorts of forgets about it, forget about the market, they don't really stay in tune with it, and then that's when you'll start to see asset prices slowly rise up and things will start a new cycle. So we'll go into that a little bit more. Hey, Brad's Brain is here. It says, good evening all, good to see you, Brad. Welcome. Anna is here, good to see you, Anna. Daryl says, hey Tom, are you near Bryant Park? I'm not near Bryant Park now, but we may go there today. We're probably gonna head up there. We're actually on Bond Street, so this is 25 Bond. This is actually rather close to NYU, so New York University. Beautiful street, by the way. This is where we tend to see the original cobblestone streets in New York City. Very beautiful. Nicholas Oliviera says, good night, bro. Good to see you. Hopefully you're doing well. Another thing I like about being down here are all these original buildings. I guess you could call them pre-war, I guess, if that's an appropriate name. Pre-war buildings with the original scaffolding, fire escapes on them. Love it. Wendy England is here. This is cool in Vancouver, but Thursday the weather is changing. It's actually pretty cool here too. Not gonna lie, I'm actually shivering a little bit, so hopefully as the night progresses and as we start to walk around a little bit more, maybe I will warm up. Hey, I see Luna Lee is here. It says, hello, another beautiful night in New York. Indeed it is. Hopefully you are well. Happy Father's Day. Happy Father's Day. Samantha R says 9.8 on the buildings, agreed. Alex Lopez says, hey Tom, cheers from Miami. Alex, I'm gonna be back there tomorrow night. Well, hopefully I'll be back tomorrow night. So I booked a flight, a 5:10 takeoff from JFK. And the reason why I did that is because I want to take off at around 8:30. So usually, here's what happens. Usually when I book my flights for 8:30 takeoff from JFK back to Miami, I wind up leaving at like 1:30 in the morning and then getting back to Miami at like 4 o'clock. So I figured, look, if everything is so crazy right now, why don't I just book my flights at like 5 p.m. and then maybe if it's like delayed like once or twice, I'll take off at the time I want to, which is like 8:30. So that's the plan. Hopefully I'll be back in Miami safe and sound. Luna Lily says NYU is where my daughter is hoping to go to school. It's a fantastic school. She must be really, really smart if she wants to go there. Fantastic school. Beautiful campus. Ryan Royal says, hey, happy Sunday and happy Father's Day, Tom, mods, and everybody. Thank you. Appreciate that. Appreciate that, Ryan Royal. Hopefully you're doing well. Jay is here. Good to see you, Jay. George says hugs from Brazil. What's up, George? Good to see you. A lot of Brazilian viewers. I think we have about 10% or 10 to 15% of the entire audience is from Brazil, which is really cool. NG says, hello, Tom and friends. Good to see you, NG. NMB 045 says, Tom, all this talk about cooler temperatures in New York and Montreal right now stems from snow that fell this weekend in very northeastern corner of Quebec. Wow. You know, I couldn't imagine living in a part of the world right now where it's June and it's snowing. I don't think I could deal with that, to be honest. WW says, so are you basically saying institutions are basically slowly buying the dip? No, so essentially what I'm saying is, and EBITDA is here in the chat too. Good to see you, EBITDA. Happy Father's Day. Hopefully you had a good weekend. EBITDA, it's probably a long weekend for you too because the markets are closed, fixed income as well as the US equity market. But essentially what I'm saying is usually, right, so let's, I don't think this guy has his lights on, but usually what happens is after these boom bust cycles, you start to get all the people coming out, you'll have Peter Schiff come out of his cave and all that stuff and say, see, I knew stocks were overvalued, I knew cryptocurrencies were going to zero, all that stuff. But it's the same market cycle that happens again and again and again. We saw this in 2018 when the stock market fell into a bear market, in which case everybody was like, everything's going to zero. But what happens is the companies that do not have any earnings, that do not produce any free cash, those are the ones that'll fall by the wayside and nobody will really pay attention to, which they shouldn't. But the regular fundamental companies that are actually producing earnings have strong balance sheets. Institutions will get in there and slowly start to accumulate stock. So usually what happens, and this is why I sort of wanted to bring this up on the stream tonight, because as I was reading, Wall Street Journal, Barron's, and IBD today, or this weekend, I should say, you start to, it's sort of like the Bernard Baruch quote, that's if you show me the charts, I'll tell you the news, right? And essentially what that means is based upon asset prices, you can kind of tell what the media is going to be writing about, saying, see, we knew all of these stocks were overvalued. See, we knew Bitcoin was a scam, it's going to zero. And that usually signals you're either in what's called a markdown phase of a Wyckoff accumulation distribution cycle. And if anybody doesn't know who he is, I would really, really do some research on Richard Wyckoff and really understand the four basics of a market cycle, which is your accumulation phase, your markup, your distribution, and your markdown. And that is the prerequisite for any sort of major market cycle. So right now, I believe the forward PE on the S&P is it's trading at about 15 times forward earnings, which is historically actually below trend. Obviously, as we talked about 2 streams ago, we have to be a little bit careful when talking about forward PE because the E in PE can change, obviously, right? So if companies produce or companies show that they are going to have declining earnings, well then maybe that 15 forward PE is actually 19, right? So I think it's really important that we pay attention to these companies that are reporting earnings. But if earnings stay consistent, but we heard from Goldman Sachs, we heard from a couple analysts at Goldman that said earnings are probably going to take about a 10% haircut in terms of forward-looking earnings, which means those earnings estimates are going to be revised down. So if you want to be conservative, you could just say, okay, let's say the S&P 500 right now is trading at 19 times forward earnings, which really it's trading at 15 times forward earnings estimates, but there's a very, very high probability that those earnings will be revised down. So what I'm saying essentially is during these market downturns, what happens is when everybody is getting so fearful and getting so upset and selling at a loss, institutions are going to work, they're building their financial models, and they're understanding, okay, what companies out here are not only recession-proof, but are going to continue to compound out their earnings, let's say at a 25% compounded annualized growth rate. What are those companies? What companies are still generating ample amounts of free cash? And those are the companies, or those are the stocks that you're going to see not decline and sort of, you're going to see a divergence in trend. You're going to see those particular stocks either go sideways for a period of time, and that is a sign of an accumulation phase going on. So usually when you'll see a stock, it'll have blowout earnings, blowout sales, fantastic return on equity. Let's cross here. Really, really good fundamentals. Those are the stocks that you're going to see start to go sideways a little bit. Because again, if you're having, if you're running a big book of, let's say, like, $30 billion, and you want to put on $1 billion position in a stock, well, it's not like you could just log on to your Charles Schwab account and click market buy. That's going to send the stock to the moon. You're going to buy maybe every Friday at the open a couple 100,000 shares, because you don't want to move the price of that stock too high. So in relation, going back talking about the crypto crash of Bitcoin, I believe at the top of the market, there was about a $3 trillion market capitalization. So $3 trillion in market cap. Now I think we're just a tad under $1 trillion. So you guys know my take. A lot of the alternative coins, the altcoins, I think the vast majority of those are complete scams. But I don't believe Bitcoin is. So what's probably going to happen, it's going to probably take about 1,000 days or so for BTC to test those all-time highs of about 69,000, I think was the top. And it's the same thing that happened in 2017. 2017 Bitcoin topped at about 20,000, and it crashed all the way, I believe, to like 3,200. I think almost like 2,900 actually. I'll have to take a look. But it took almost 1,000 days for it to test this view of the Empire State Building. I mean, not Empire State Building, the Freedom Tower. It's so cold I'm actually shivering tonight, guys. Corrections happen in two phases. Number one, you could have a price correction, so a price decline, and then you could also have a correction in terms of time, so price and time. So usually at the top of a major cycle, the correction will last extremely long, like 1,000 days, which is over 2 years. And that's by design. That's by design, because historically retail, or the average investor, doesn't make money. It's the institutions, and they have to tire you out. So I would put money on that probably in a year and a half from now, the vast majority of people aren't even going to remember Bitcoin, or they're not even going to remember a lot of these growth stocks. And that's when you're going to slowly see institutions start to accumulate this stuff, in which case the cycle will repeat in about 2 years. Maybe we'll see Bitcoin at like 30,000, and then people will start to FOMO in again, and then the cycle repeats. But that is the Wyckoff accumulation distribution. Hey, the Mighty Bull is here. What's up, Mighty Bull? Always a pleasure to see you, my friend. Hopefully you are well on this cold, cold Father's Day. Happy Father's Day, everybody. Dave says, hey, Tom. Hi, everybody. It was the perfect weekend to be in New York City. Indeed it was. A little bit chilly, but it was a perfect weekend nonetheless. Good to see you, Dave. Hey, Rob DeCaro says, Tom and people in the live chat, will you guys wish me good luck on the Special Olympics Ohio State Summer Games? Of course, dude. Yeah, absolutely. Good luck, man. Good luck. I'm sure you're going to do fantastic. I'm sure it's going to be a great success and a great accomplishment, by the way. Congratulations on all your success. Love that. And please keep it coming. Please keep the success chugging along down the track. Love to hear it. I'm wishing you well. Everybody else is. Wow, Gregory says it's currently 89 here in Minnesota. I would think the opposite. If I had to guess, I would say Minnesota would probably be like in the 50s as opposed to New York. Weird weather patterns we're having here, guys. Very strange. Hey, EBITDA is here. Says, Tom, I finally exited both my big positions, XLE and SQQQ. Hold on, the chat's going like crazy. EBITDA, I just lost your comment. Let me see. I'll find it again. Oh, return 95% for me. Nice, EBITDA. Love that. EBITDA says, Tom, I prefer to look at PEG instead of P. What are your thoughts on that? Yeah, so in my view, very seldom do I even look at PEs ratios. Very, very seldom do I do that. I really will only look at the PE ratio of the major broader index or an indice, because usually when the S&P gets to right around maybe like a 16 times forward earnings, that is when historically it's a great buy. Historically it has always been an extremely aggressive good buy. Hold on, I just want to show you guys the world trade right here. When the S&P gets to about 15 times forward earnings, which we are right now, we're there. That doesn't mean it can't fall more, because if you think about it, if earnings decline, right? So if we go through the next earnings season and earnings come in lower than expected, or even revised down, well then maybe that 15 times forward earnings is 19 right now. I don't know. But yeah, on individual stocks, EBITDA, the only reason why I don't really look at PEs is because if you think about it, sometimes it's a low PE for a reason, right? There's a reason why it's only trading at 2 times earnings, right? Sometimes there's a reason for that. It's the same thing like when people talk about, oh, I'm gonna buy this stock because it has a 20% dividend yield. Okay, well there's a reason why it has a 20% dividend yield. The thing's probably gonna go out of business, right? It's sort of like all of these people, and EBITDA, you actually brought this up. You actually made this point, I believe, that it's the same thing with these stable coin guys in the crypto sphere saying, oh, I'm going to lend out whatever they call them, the tokens or whatever, at 20% because it's better than, leaving it in a bank account. But you and I know, if you're experienced as a debt trader, anything really above like a 3 to 5% yield is junk status. So if you're having these crypto companies promise you a 20% yield or higher, well, what does that tell you about the project? Or what does that tell you about the sustainability of that? Probably not too sustainable, right? I don't care how advanced their supposed algorithms are. If you go into the junk market and you see a bond yielding 20%, what do you think? Do you think that's junk status or not? I think it probably is. Arnold's, is there an Olympic event for walking? I think Tom should compete. I actually think there is an Olympic event for walking. I think it's called speed walking, and I'm serious, I think there is. But I think the caveat is you have to have both of your feet on the ground at the same time. Check out this. This is a very interesting piece of artwork here. Beautiful. Hey, Lewis is here, says hi, good to see you. Rob DeCaro says, I am running in the 100 meter and 200 meter on Sunday morning. Ooh, nice. Well, good luck, Rob. I'm sure you're gonna do fantastic. And please report back to the stream. Let us know how you did. Please let us know how you did. But we're wishing you well. So this is where your eyes become art. So these are actual pictures of people's, what do you call these? Pupils, I guess? Very interesting. Oh, Mike, it's 2 feet on the ground at the same time, sorry. 2 feet have to be on the ground at the same time or something like that. Or, does anybody know what I'm talking about the speed walking? It's you can't have both feet in the air. Like at least 1 foot has to be on the ground or something like that. Deja vu. So it seems like GLD and Palladium are almost incredibly equal. Well, I think that's another, we're actually walking the wrong way, but I think the view of the Freedom Tower or the One World Trade is amazing tonight. I wanted to give you guys a closer look, but we're gonna turn around now. Even though gas prices are ramping to all-time highs, we still have to stay objective here and understand that trends can change. So I've been really paying attention to commodities here, everybody. And if you want to pull this up on your own screen, if you have TradingView or you just want to Google it, copper's rolling over. Many of the precious metals are rolling over here. You have lumber, which is I think down 60%. Lumber futures are down 60% from record highs. Also, if you just want to talk about crude oil, I believe we hit a high of about $130 in crude oil back in May. We failed to take out that high, and we actually sold off pretty hard last week. So is it possible for this commodity cycle to be topping? I think it's possible, or maybe we just have a correction in a longer super cycle. But something is giving way here. Something is definitely giving way. Hey, Who Dat Dave is here. Hey Dave, what's up? This is correct. Both feet cannot be in the air. One foot must always be touching the ground. If both feet are required to be on the ground, it would be standing still. Yeah, so you're right. I got the analogy mixed up there. Yeah, but Dave, you're right. That is the speed walking event. But good to see you, Who Dat Dave. Welcome. WW says you're the closest to heaven that I'll ever be, and I don't want to go home right now. Maybe that's song lyrics. Hey, the ABX girl says, Tom, the race walking, or yes, race walking is a sport. I have been with the New York City Walking Club for 20 years. Wow. Very cool. Jerry's here. Good to see you, Jerry. EBITDA says, Tom, I am maxed on BTC. It was touted as an inflation vol / store of value and uncorrelated to market hedge. It has proved that all of those are incorrect. Why should I still have conviction in it? Yeah, so I think that's a good question. So here's sort of my rebuttal to that. So I have a 5% weighting to Bitcoin at all times. So that means as the market declines, my 5% weighting is now not a 5% weighting anymore, right? So that means I'll have to add to my positions. So I don't trade Bitcoin. I view Bitcoin as like a commodity, like a precious metal, like a gold, right? So gold doesn't produce any free cash. Bitcoin doesn't produce any free cash. It doesn't have any earnings. It doesn't have any revenues. It doesn't have any of that. But over time, it should preserve your purchasing power. So in regards to an inflation hedge, you may be saying, oh my God, the CPI print was just 8.9%, right? We just got a face-ripping inflation print, CPI 8.9%. Well, here's the thing. Assets usually move, and EBITDA, you know better than anybody in the chat. Markets are forward-looking indicators. So if we're talking about the equity market, the S&P is always looking 12 months out, about a year and a half out, always. So based on that, when did Bitcoin start its super cycle when it increased 1,000% from the lows of 2020 to the top in November? I think it topped in November. That was 1,000% increase. That was before, I think the CPI print in 2020, and you guys can keep me honest, I think was right around like 5.2%, and then we got like a 6% reading, then we got a 6.5, then we got a 6.7, then we got a 7, then we got a 7.5, 7.9, then 8, 8.2, 8.3, and now 8.7 where we're at. So the move already happened. Right, so if you go back to a lot of the interviews that Paul Tudor Jones and Stanley Druckenmiller were doing, they say, hey, Bitcoin is the fastest horse in the race as an inflation hedge. This was 2 years ago, or this was a year and a half ago. Bitcoin made the move, anticipating that inflation, and outperformed it by 1,000%. Same thing with equity. Same thing with equities, and same thing with gold, by the way. But gold just didn't perform as well, but it actually did perform rather well. So that's sort of how I think about it. These assets tend to make the moves in anticipation of the event. And when the event gets here, the move is over, right? And that's how markets have always worked, right? Markets are a forward-looking indicator. The S&P looks out 12 months. So when you saw Bitcoin go to Mars, gold go to Mars, you're like, yeah, inflation is definitely coming, and now it's here. So now that these assets are coming down, this signals to me that I think inflation may be short-lived. I think it may be short-lived. which we'll talk about tonight. But again, look, I could be wrong. That's just my take on it. That's just my take. I'm not saying that this is right. That's just my take. But I'd love to know what you guys think. Hey, Don Smith is here. Says Germany is starting up the clean coal power plants because of the Russia gas problem. Rusty is here. Good to see you. Rusty says, I see HG as bottom of consolidation zone, not quite yet rolling over in my opinion. Says Rusty, yeah, a lot of the other commodity tickers, and look, maybe you're right, Rusty, maybe it's not rolling over here, maybe it's just a normal correction in a longer uptrend, but I always want to keep my eye on it. I mean, hopefully, I mean, we could only hope that, some of this stuff starts to roll over here. Hey, Jason Francis is here. Good afternoon, Jason. Happy Father's Day. EBITDA says, Tom, I'm still happy that my dad talked me into putting $100,000 into crude when it was $0 during COVID. Yeah, it seemed like a no-brainer. I sold 80% of that trade though. Very nice, EBITDA. Yeah, at one point we actually had negative prices, and the reason for that is, if anybody understands how the futures market works, you literally have to, if you're holding these contracts at expiration, you literally have to take receipt of this stuff, like literally. Like they'll show up to your house with barrels of oil. Wendy England, good to see you. Hey, Priscilla's here, says, hey Tom, how's it going? It's going really good. It is a cold night here in New York City. We're checking out some of the artwork here in Soho. Here's another interesting gallery here. I think this may be the Manhattan Bridge or the Brooklyn Bridge right here. Cindy Foley is here, says hello. Good to see you, Cindy. Check out these skateboards. These are nice. Wow, $260 for these. You guys think that's worth it or not? What do you guys think? FredX is here. Good afternoon, FredX. PA Greens, is anyone in Virginia? We probably should have some people in the chat from Virginia, but good to see you. Priscilla, James, good to see you. Welcome, James. Mighty Bolus is greeting everybody. Elliott Wave Review says, Tom, Bitcoin should have been marketed as a form of payment instead of store of value. The latter has caused everyone to focus on price instead of utility, says Elliott Wave Review. Interesting thought there, Elliott Wave. Mike C says, my first thought, that was a bug on the screen. Yeah, my camera may be out of whack tonight. Kilo Whiskey Juliet, good to see you. Delargo is here. What's up, Delargo? Good to see you. Smee Media says, interesting gallery, Tom. Thanks for the stream. Thank you for being here. Yeah, there's always really interesting galleries down here in Soho. Hey, Derek is here. Says, hey, bro. Derek checking in from Philadelphia. Hey, I will be in Philadelphia very soon, my friend. Philadelphia is a great city. Love that. Love Philly. Yeah, let's see what this is. Really nice here. It's $1,700. It doesn't tell us what it is though. It doesn't tell us. Let's see. I'm just gonna go out on a limb and say this is either the Manhattan Bridge or the Brooklyn Bridge. That looks like the Brooklyn Bridge to me. Beautiful painting though, love it. Okay, everybody, just one quick thing. Daryl says, Tom, did you see the lift apartments in Soho before prices? Did you see the loft prices in Soho? I think they're way too expensive for me, man. Honestly, that would be the dream if I could afford one, but probably not, unfortunately. NMB 045 is here. It says BTC couldn't market itself as an alternative method of payment because Visa and MasterCard can process many times more transactions a second than BTC. Yeah, I think they're trying to address things like that with the Lightning Network, which I understand, but yeah, all good thoughts, all good comments. Loving the conversation here. I found it rather interesting. Yesterday on the stream, we were talking about my brief back and forth that I had with hedge fund manager Dan Tapiero on Twitter. Now, Dan is an extremely well-recognized, highly decorated money manager that actually worked directly under Stanley Druckenmiller. So extremely smart guy. I actually had the pleasure of meeting him a couple months ago. But essentially he was talking about the Federal Reserve, even though they're trying really hard and being really aggressive here with trying to get inflation under control, he actually thinks that they may be doing too much. He thinks that the 75 basis point rate hikes could be doing more to hurt the overall economy than it would be to help it. So here's his thesis. And I think it's going to be interesting to explore this. We explored this briefly on last night's stream, but I think it's important to talk about it again, and I'll tell you why in a minute. Essentially what he's saying is, if we follow the theory of a wealth effect, which works in bull markets when people's retirement accounts, that could be anything like a 401k or an IRA, as those things tend to appreciate, people feel more comfortable going out to restaurants such as this, spending money, buying things, buying products, buying services, and just spending a little bit more because they feel confident that their investments are actually appreciating and going up, so they feel. This place looks fantastic, by the way. I've never been here, but it looks great. It smells really good. Because consumers feel confident in their net worth. So here's his position. As a reverse wealth effect, and this is some preliminary data we have out of Wilshire Associates. They say that U.S. equities have lost $12.5 trillion this year and $13.1 trillion from November's peak. So think about that for a minute. U.S. equities have lost $12.5 trillion this year, and from the peak, or the stock market topped last year in November, about $13.1 trillion. The effects of rate hikes likely ahead could result in a total loss of about 20 trillion. So it could result in a total loss of about 20 trillion. If we compare that to the tech and telecom boom and bust of 2000, we lost $6 trillion. Right, huge devastation, but nothing comparing to this. So here's his position. Dan Tapiero thinks that that is a leading indicator, essentially saying, based upon the fact that prices are coming down so much, people are going to be looking at their 401k statements, their retirement statements, and say, whoa, okay, we got to cut back on the spending. Maybe we won't buy that second vacation home. Maybe we won't take that trip. Maybe we won't buy, we'll cut back 20% on our Amazon purchases because of the reverse wealth effect. So his argument is, you don't have to raise rates as aggressively as we are because the market is already pricing that stuff in for us. Now, I'm not saying that I agree with his thought process. I think he's half right, but then again, he's way smarter, way richer, more successful than I am. But I think it's a good thought. I think it's an interesting thought. So he's saying that the Fed could potentially tip the U.S. economy into a depression if they continue to be aggressive with raising rates. Because we've already obliterated about $13.5 trillion in wealth out of the stock market. And if they continue to hike to their goal of 3.4% by the end of the year, that 13 trillion could turn into 20 trillion. So the theory is the next CPI print could roll over based upon that fact alone. I don't know, but what do you guys think about that? Do you think are you sort of following his logic train there? Don Smith says the Fed can't stop inflation on oil and food. Interesting thought. Kurt flirts as whom, but again, he isn't taking in the type of political climate that we are in right now. We discussed that last night, and I truly believe that this is what the issue is. Things shouldn't be this bad. Dr. Longus says, wow, 13 trillion. Yeah, it's insane. Irish Lou says, if you pay by hours, you'll like long weekends. Working in the weekend, you will get paid more. Yeah, that's true. That is true. Hey, Buy the Book is joining us. Good to see you, Buy the Book. Happy Father's Day. Kevin Ramsey says, happy Father's Day. Thank you so much. Happy Father's Day to you too. Real Talk New York is here. Good to see you, Real Talk New York. Sunshine After Rain, welcome. EBITDA says, Tom, I honestly feel like now is just a stock picker's market. The only exposure I have right now is through options. This is outside of my retirement account, of course. I do not feel comfortable owning right now. I think that's a good choice, EBITDA. Wait for the follow-through day. I agree with you. Let me read a couple more comments. Guys, we are right outside of NYU. This is the campus of New York University. And we are right outside of Washington Square Park. Jay Nibbs says, everybody make yourself independent of market moves up and down. Learn to trade options. Learn how to be long and short the market and be careful, says Jay Nibbs. Who Dat Dave says lower gas prices would be a big event on the inflation pressure as high gas prices at strictly as a tax on the economy. I agree, which we may get though, Who Dat Dave. Well, type in ticker symbol CL, which is crude futures. In May, we hit a high, I believe 130 is the highest we got. And we started to roll over. We started to creep back up to that level. Of about 125. We rolled over. I think we're at about 100 even, or 102. Sabrina Fair says, Tom, have you pondered that this may be the intended consequences of financial leaders? Yeah, so we talked about that, I believe, 3 streams ago in relation to fiscal policy making all of these problems, as opposed to only blaming the Federal Reserve on the monetary policy side. But yeah, I think you're 100%, I think you're right. I think you could be right. Dr. Longus says, Tom, less regulation on oil production would be as good as a tax cut when prices come down. Mike C says, the Fed seems to inconsistently overshoot in both directions. They do. EBITDA says, Tom, if I could set it up, would you ever want to interview ex-managing directors from Vanguard, BlackRock, etc.? I would have someone, EBITDA, absolutely. So EBITDA, 1,000%, and I'm going to start to do that on the Behind the Street newsletter. I do have a couple managers lined up, but I would love to start doing that because we are going to launch on Product Hunt. So I will notify everybody of the exact day, but the Behind the Street newsletter and Walks from Wall Street will be launching on Product Hunt, which is pretty exciting because that will allow me to potentially hire 2 analysts. So maybe from like a business school or something like that, that are trying to break into investment banking or software sales, enterprise tech, whatever that may be, and have them write dedicated columns in the Behind the Street newsletter to help people obtain careers in investment banking as well as enterprise tech. So when we launch on Product Hunt, I will let you guys know, and we will definitely be able to have more resources to provide more content on Behind the Street. But yeah, EBITDA, that'd be fantastic. I think that'd be awesome, man. I appreciate the offer too. I really, really do. Very, very nice of you. Hey, Miss Brown Eyes is here. It says Happy Father's Day to all. Thank you, Miss Brown Eyes. I appreciate it. I really, really appreciate it, Miss Brown Eyes. Hopefully everybody in the chat, if you're just joining, it is Father's Day. So I think maybe we'll try to talk about that a little bit in terms of economic prosperity, but I think it is highly underrated and undervalued, the value of a father being there. You know, this reminds me of Barack Obama's speech back in the day, which I think was one of the best presidential speeches of all time. By the way, not to get political, I don't want to argue politics, but Barack Obama did a fantastic speech about the importance of a family, you know, and the importance of having a father figure in your life. It's so critical. It's so critical when we're talking about socioeconomic status, you know, staying out of jail, things like that. So fathers are extremely, extremely valued and important. So I thank all of the fathers in the chat. It's really, really important. Really important. Hey, Vinny Castellano is here. Vinny Castellano and Maria Castellano from Staten Island. Good evening, good afternoon. Good afternoon. Yeah, if anybody types in that speech, I forget the name of it, but it was it was really, really well done. Really, really well done. NG says, I remember that speech and it stood out to me, something that anyone from either side can agree with. Yeah, and I thought, you know, NG, I thought it was really well delivered. So as a salesperson that has to give presentations, it was like a really, really well delivered speech. Wow, check this out. So you could see the Empire State Building. It is lit up in, let me zoom in on it, hold on. So the Empire is lit up in red, black, and green today for Juneteenth. You know, it's almost a very similar color scheme to the holidays. Hold on, I want to make sure the, I don't know if the camera's in focus here. I may have to move over to the other side. But yeah, so the color scheme is red at the top, black in the middle, and green on the bottom for Juneteenth. But I think I need to get away from these lights so the camera can focus on it. Just give me a second. I think it may be a little bit better from here. Check that out. That's awesome. Hey, Junior says, hey, Tom, happy Father's Day. Thank you so much, Junior. Hopefully you had a great one. Kurt Flirts is nice. Good to see you, Kurt Flirt. Hey, War Walker, what's up? War Walker is joining us from the 305. I'll be back in Miami tomorrow, War Walker, by the way. EBITDA says, Tom, I could also get some professional athletes, startups, and CEOs. I honestly have quite the network from myself and my fathers. Not promising you I can get Steven Schwartzman. If you can get us Steven Schwartzman to do an interview at the Schwartzman building, that would be fantastic. Just kidding, EBITDA. No, but seriously, if you can. No, but that's awesome, man. I really appreciate that. That would be amazing. Oh, DeLargo, let me go back. Sorry, I think I missed it. DeLargo, thank you so much for the donation, my friend. Says, hi, Tom, the logic behind 1,000 days before the next all-time high in Bitcoin. Yes, so I will explain that really quick. EBITDA, if you want to send me an email to @WalksWallStreet, I'll send you my phone number. But yes, absolutely. Call me anytime, set up a Zoom, 1,000%, or I could just message you on Discord. But Delar, hopefully I'm pronouncing your name right. So here's my thesis around that. It's just a basic market cycle. So at the beginning of the stream, we started to talk about Richard Wyckoff, right? So if you know the theory of Richard Wyckoff, he observed the market, and what moves the market is the composite operator. And a composite operator, you could essentially just say, is a large institution, right? It's not a retail trader, it is a large institution running billions of dollars. So you'll have 4 stages. You'll have your accumulation phase. You'll have an accumulation, I don't know what that was. You'll have an accumulation phase. You'll have a markup. You'll have your distribution, and then you'll have your markdown. So right now, I believe, and it's pretty obvious, we are in our markdown stage. Maybe they're closing the park. Let me get out of here. I don't want to get in their way. I believe we are in the markdown stage now for Bitcoin, in which case you're going to see in the mainstream financial networks, even on regular financial TV, everybody pounding the table, doing their victory laps, saying, see, I told you so, everything was a big scam, and yada yada. In which to many cases they're actually right about the vast majority of the altcoins, but Bitcoin, they're wrong. I've been in this since late 2016. So the reason why I say it'll probably take about 1,000 days for Bitcoin to reach all-time record high, because corrections don't only happen with price. It is a time correction as well. So the market will do whatever it takes to tire out and wear out any market participants. So as prices go down, people start to feel disparity, they get depressed. Then as they see price not do anything for a year and go sideways like we did in 2019, 2020, and parts of 2021, they'll just forget about it. And then that will allow large players to slowly accumulate more Bitcoin. Then you'll get your markup phase. And this isn't exclusive to Bitcoin, by the way. This is every single asset on the planet. It will happen again in the stock market, but they do it in very selective assets. When you're talking about the equities markets, they start to accumulate companies that are growing or compounding out their earnings. So maybe the company has really good earnings growth that are compounding out at 25% plus per annum. They have fantastic return on equity. So even though the prices are depressed, there's an old saying on Wall Street that prices tend to surprise to the upside and surprise to the downside. During these times, there will be an accumulation cycle that happens. So my thought process about 1,000 days is it usually takes 2 years for Bitcoin to test record highs. So I think prices will stay depressed, maybe even go lower, have a flush out to like 10,000 maybe. And then you'll have another cycle. It's nothing new. It happens the same thing. I saw the same thing in 2016. The same thing happened in late 2017, and it's going to happen the same thing now. So let's take one lap around Washington Square Park, and then we're going to head up. I think we're going to walk up Fifth Avenue because it's going to have a better view of the empire. NMB 045s is why are those CNBC pundits having a hard time understanding the nuances between Bitcoin and altcoins? Yeah, I don't really know NMB 045, and I try not to think about it or worry about it too much. There's also a thing called the fog of war phase. So, and if you're on Twitter, this is really why I love Twitter, because Twitter is a great way to gauge sentiment. So I think we are in the despair, but a lot of people will try to say, oh, I'm going to time the bottom of the market, buy it, and then it's going to go to all-time highs within a month. No, it usually takes 2 to 3 years. This is severe damage. I don't think a lot of people realize this bubble grew to $3 trillion. Okay, this bubble grew to $3 trillion, and now it's a little under $1 trillion in market cap. So that destruction is going to take some time to repair itself. And as we were talking about 3 Arrows Capital, which is just one hedge fund that's probably going to go belly up, they're probably going to start an asset sales phase. And you may be thinking, well, Tom, why would they sell their assets to competing hedge funds when they could just sell their Bitcoin or their assets on open market? So that's a good question. Well, a lot of these hedge funds, I think, large in part due to artificially low interest rates and things like that, they not only own, stocks, they not only own Bitcoin, but they also ventured into private equity and venture capital. In which case, when you're investing in the private markets and this wealth evaporates overnight, you'll have something, I don't know what's going on here. Essentially what you can do is you could sell your stake in those companies to other hedge funds for pennies on the dollar. So other hedge funds out here that are well capitalized and that were not exuberant and irrational with their utilization of leverage are actually probably going to get to buy a lot of these deals for pennies on the dollar from a lot of these suffering hedge funds out there. So that's going to take a while to work its way through the market as well. It's sort of like the same thing that would happen with the Archegos debacle, but that was mainly specific to equities. I'm not sure if they owned any private equity investments or VC investments, but that's another topic for another stream. Yeah, Gregory's like jam session. You know, the smell of marijuana is not as strong as last night. Last night was pretty crazy. Iris Lewis says, if you are young, don't worry about the market. In a few years, the market will go higher than it is today. In most cases, that's true. In most cases, that's true. But I do think we need to be cognizant about what happened in Japan, right? I think the only thing that's different this time, and again, it's famous last words on Wall Street to say it's different this time, but it is. I mean, things are fundamentally different. I mean, we have so much more debt than we did have during the Volcker years. A lot of people are trying to compare this time when Paul Volcker raised the interest rate to 20%, but we didn't have this debt burden we had now. So sort of look at the Japanese equities markets. You know, it took, I don't even think it ever cracked all-time highs. I think it just got back to where it was 25 years ago, and then it started to roll over again. So there's no guarantee that the market will always go back to record highs. Just look what happened with the Japanese stock market, and now you're seeing it with the Japanese currency. You're seeing the yen get absolutely pounded, and we talked about why that probably is. Why the yen is getting absolutely murked and obliterated is because they're not following along with the Federal Reserve and the EBC and many other central bankers around the world. Unfortunately, what the Japanese are doing is they're doing the complete opposite of what many central banks around the world are doing, which they're still doing quantitative easing and artificially low interest rate policy. When you have the ECB, Christine Lagarde, you have the Federal Reserve with Fed Chair Jerome Powell actually in a tightening cycle. And QT essentially means you are allowing assets to roll off or mature and roll off the balance sheet, or just selling them outright. And Japan is doing the opposite. And I think that's why you're seeing a little bit of shakiness in the currency in Japan, because people are starting not to trust or believe in that specific currency anymore. Who Dat Dave says, how can anyone enjoy driving that car with that much noise? You know, you should see it in Miami, Who Dat Dave. It is 20 times worse, but I agree with you. I don't know how these people think straight with the car exhaust to the muffler going crazy. Who do we have in the chat? Hey, we have Andy S. What's up, Andy? Welcome. Hopefully you're good. Andy S. and Andy is here, says, well said, Tom. Andy is joining us from South Korea. Sabrina Fair is here. Mystery Girl says, hey, Tom, I hope you had a great weekend. I did. Well, it's technically a long weekend in America. I believe now it is a federal or a federally observed holiday. So fixed income markets are closed. The equities markets are closed tomorrow for Juneteenth. EBITDA 10-4, copy that. Once I finish streaming, I will hit you back on the Discord. But I appreciate it. JK is here. Good to see you, JK. Honest as those cars are so obnoxiously loud, we hate hearing them accelerate. Agreed. Wendy England is here. Says Miami is nuts with the car exhaust. Yeah, I think there's tighter regulations in New York specifically in relation to that. Arnold says, hey Tom, what do you think about CNBC CBDCs in the US? I think they are, oh, lost your comment. Where'd your comment go? Could you post your comment again, please? For some reason, when the my chat like lags and it skips like a. James says, Tom, you should join Truth Social. Even Gavin Newsom is on there now. So Truth Social, what is that? Oh, Truth Social is the Donald Trump's social media platform, right? The DWAC, or the D, isn't that a SPAC? The Special Purpose Acquisition Company? Yeah, I don't know. I just don't, the only social media I have, everybody, is Twitter and IG, which very seldom do I even use my IG. I'm really on Twitter, because Twitter is a fantastic place. If you want to follow us on Twitter, please follow Walks Wall Street. But now we are passing East 10th Street, headed uptown. We are about to run into Union Square. So now that we talked about that sort of reverse wealth effect, everybody, even though it is Sunday night, the markets are closed, so the fixed income and equity markets are closed, but I think we're still going to do the Markets a Look Ahead stream tonight. We have a couple of things to cover. Key pieces of economic data are coming out tomorrow. Not tomorrow, I mean next week. So let's talk about what's going to happen on Tuesday. So Tuesday, we have the National Association of Realtors. They're reporting existing home sales for May. Many economists are estimating 5 million or 5.37 million homes were sold. That's 240,000 homes fewer than the April reading. Now, if you remember correctly, April was the lowest reading since June of 2020. So what was going on in June of 2020? I mean, the credit markets were essentially frozen. Nobody was buying houses, nobody was doing anything, because we were in the depths of the COVID pandemic. So why do we think that housing sales are rolling over here? So we're probably going to get a reading of about 5.37 million. In my opinion, it actually could come in a little bit lower than that, which I think would be a little bit concerning. But I think the main reason why is because interest rates are going up. So I believe the average cost of a 30-year fixed rate mortgage is roughly about 6% or 6.3%, which is about 50% more. 50% more. The cost of your mortgage payments would be about 50% more than they were this time last year, which is really, really horrible and not good for the housing market. So what that means is one of two things. Many people are saying that you're going to see steep declines in the prices of homes. Maybe. I think you'll only see that if you see a glut of supply come on to the market. And right now, we're not seeing that much supply come on. We are seeing supply tick up a little bit, but we're not seeing a huge amount of supply come on to the market. Because if you think about it like this, the people who locked in rates under 4%, they're probably not going to go anywhere anytime soon, and they're probably not going to list their houses for sale. Because where are you going to go? You know, you're going to buy another house, and then your mortgage payment, even if you buy a house that is half the value of your existing home, your mortgage payment is probably going to be double, right? So I think that's the main thing that we should look for out of that report. So I don't think it'll be Armageddon, but I think it's something interesting to look for. The Mortgage Bankers Association on Wednesday, following that report, will release their weekly application survey. And this is a leading indicator of the housing market because it'll give us some insight to how many... Hold on. I didn't want that guy to follow me. It'll give us some insight onto financing activity. So how many people are getting mortgages, how many people are refinancing, which is probably going to come in, those numbers are probably going to be really egregious, because if you think about it, why would you refinance your house, or why would you refinance your mortgage now that rates are 6%? Doesn't really make any sense. And we saw this because the index, I believe, last month hit a 22-year low, and refinances fell 75% year over year. That may sound like a crazy number, but I think it's pretty obvious, right? So refinancing, when rates are 6%, the vast majority of people already have rates that are below 6%, so there's no real need to refinance. I think we saw this refinancing boom happen over the past, I would say even 7 to 10 years, because rates have been on a one-way trajectory lower, right? So if you locked in your rate at 6%, and then after the 2020 COVID crisis, you could lock in a rate sometimes at 2.5%, why wouldn't you do that? So now as rates are going back up, obviously you're not going to see that many refinances because rates are higher. Lifeline says the Fed last week vowed its commitment to containing inflation was unconditional, while Fed Governor Christopher Waller on Saturday said he would support another hike of 75 basis points in July. Let me just time out this spam bot here. Yeah, Lifeline, I think that Fed Chair Jerome Powell may not have a choice. To your point, what did Fed Chair Jerome Powell say 2 months ago? He's like, there's no way we're going to do 75 basis point rate hike. Then we got hit with an 8.7% CPI number. He's like, okay, yeah, we need a 75 basis point rate hike. So it's a good point. Hey, Brian Forrest is here. Good to see you. Welcome, Brian. Hopefully you're doing well. Yes, SME Media, you're right. You're 100% right. Says everybody was refinancing a year ago. I was hearing about people refinancing and getting like a crazy low rate, like 1.75, like something ridiculous. Alice is here, says, hey Tom, how are you? Hope everything is good. Yeah, everything is going really well. Everything is going really well. It's a bit chilly, a little chilly out in New York City, but it's a beautiful night nonetheless. Clear skies. We are here at Union Square, 14th Street. But if you guys are liking the stream, if you're enjoying the stream, if you're enjoying your Father's Day, feel free to leave a like on the video and subscribe if you are new. Who Dat Dave says, Tom, Jerome Powell admitted he was unsure of actions to take because of the supply chain debacle. That's another good point. And I think that, and we were talking about this 2 streams ago, because you guys know me, I tend to really hammer hard on monetary policy, which means I tend to, blame Fed Chair Jerome Powell for everything. But I don't think he deserves all the blame. So to Who Dat Dave's point, supply chains are really, really struggling right now and continue to struggle. As we saw on many earnings reports, many C-level executives at publicly traded companies are talking about continued supply chain struggles, especially due to the zero COVID policy in China, as factories are shutting down, as more lockdowns are being rolled out. So I agree, not everything is Fed Chair Jerome Powell's fault. And, I think a big problem that's adding to inflation is supply chains. So I think once we have supply chains restored, that should relieve some of the inflationary pressures. But I'm just not sure that's going to be possible because a lot of that stuff is out of our control. And in order for a country to reroute their supply chains, and we're actually starting to see this, not for nothing, we're actually starting to see this, especially with Apple. I think Apple is now going to manufacture a lot of their iPad production outside of China now. Wendy England says, Tom, the Industrial Revolution was uncomparable at its time. 100 years from now will be something else. I agree. Kirby says, how will Fed's 75 basis points affect food price inflation or not? Well, the theory is, if we just take it at face value, as rates go up, that tends to cool the economy. And it should cap inflation. But as we've been talking about, it may not only be monetary policy that needs to be fixed in order to fix inflation. It's fiscal policy, it's government spending, it's supply chains, it's a lot of stuff. EBITDA says, Tom, do you currently have any longs in your portfolio, or have you been stopped out of everything and sitting in cash? I have a little bit of service now, but it's like such a negligible position. It's like a couple $1,000. I'm like above 95% cash in my actively managed portfolio. But I have like a couple little little shares of ServiceNow floating around in there, just to get a read on the market. But then again, I mean, oh, that's a German Shepherd. Check that out. You guys see it? And I think it's a puppy German Shepherd too. Hold on, it's gonna come. You'll see it. You see him? Yeah, those German Shepherd dogs are fierce. Love those things. But yeah, EBITDA, as your point, my actively managed portfolio, I mean, I've never been in this amount of cash, and I am waiting for the follow-through day. But everybody, we are at the top of the hour. So on Tuesday, I will be sending everybody the Behind the Street newsletter, which is a free financial newsletter I do write for everybody, which we cover the US equity markets, we cover fixed income, we cover emerging markets. So if you want to follow us there and join us on the Behind the Street newsletter, feel free to scan the QR code. And on Tuesday, every other Tuesday, you will get that free financial analysis, all of my equity research for free in your inbox. You do not want to miss it, so scan the QR code and punch in your email. And now we will head uptown, further uptown, to check out the Empire State Building tonight. Hey, Nirvana Fan 500 says, yes, I can't wait for the day where AI takes all the jobs so we don't have to go to work. You know, if you want to read an interesting book about that, I would read AI Superpowers by Dr. Kai-Fu Lee. Dr. Kai-Fu Lee, obviously we've talked about him almost ad nauseum now on the streams. But he was the former president of Google China during the dot-com boom. Hey, Boss Lady is here. Good to see you, Boss Lady. Says new subscriber here. Thank you for joining the channel. We appreciate it. Yeah, so Kai-Fu Lee right now, and if you could actually look at his portfolio, he runs a pretty interesting VC fund. I believe it's based out of Silicon Valley, but they only make investments into leading and emerging ground floor AI and machine learning startups in China. So the name of the fund is Sinovation Ventures, if you guys want to check that out. So you can type into Google Dr. Kai-Fu Lee, Sinovation Ventures. Pretty interesting portfolio they have there. If you go to the website, they essentially invest into early stage AI and machine learning startups in China exclusively. So I think if you want to grow your knowledge base on the tech world in China, I don't think there's anybody that knows it better than him. Could be wrong, but check it out. Irish Lou says a lot of things aren't made in China already. Andy says we'll check Tom. Thanks. I think it's. I think if you type in the chat exclamation point Kai K-A-I-F-U, enter. It'll drop an interview, very good interview, with Dr. Kai-Fu Lee. Michael, let's not do any of that stuff in the chat, man. I appreciate you, but I can't have any of that stuff in the chat about the big C stuff. I respect your viewpoints and opinions, but you know you're gonna get the channel taken down, man. Ryan Royal says, I read an article that the Chinese government wants to review everything on Chinese social before it is posted. Well, I think they're already pretty much doing that now. Inadvertently. Mr. Ming, good to see you. Hopefully you're well. All right, so now we are walking up Broadway. This is East 18th Street. So I think this may be a vegan ice cream place here. Hey, Arnold says, hey Tom, did you see that Spotify is now getting into the business of audiobooks, but they are already having an underperforming podcast business? I did not know that, actually. I did not. You know, I usually consume the majority of my content on YouTube, to be honest. But interesting piece of information there. Iris Luce's American issues has a lot to do with the U.S. government, nothing to do with China. That's a good point. We definitely do have incompetent leaders on both the right and the left. I think we could all agree there about the incompetence. Hey, ice cold beverages, are these are those rooms above storefronts or offices? So I think it's a mix of both. The stuff that's above all these storefronts are either, number one, apartments, or they are office space. But I think I would go out on a limb and say about 50% of them are office spaces and 50% of them are apartments right here on Broadway. And this is between 13th Street and 22nd Street, so between both of them. But the Census Bureau, everybody, on Friday will also report, so we have a ton of housing data coming out this week. So the Census Bureau will report new residential home sales. So this isn't existing home sales. This is brand new home sales data for May. So new single family homes are to hit a seasonally adjusted rate of 590,000. In line with April numbers, new home sales make up 10% of the housing market. These numbers are down 40% from August of 2020. And this is the numbers that we should be expecting. And here's why I say that. If we look at a lot of the housing start data that came out, so this is why it's really, really important to pay attention to all this stuff, because one piece of economic news is a leading indicator to the other. So the Census Bureau's housing new home sales for new single-family home sales are essentially confirming the data we got last week. And last week we got data that housing starts are down about 14%. So housing starts are down about 14%. That is due to a decrease in demand from higher interest rates. That is also due to elevated commodities prices and the like. Although I would like to note, if we think about the home builder companies or the home builder stocks, let's just talk about Toll Brothers for a second. So Toll Brothers is a home builder, but I do believe the vast majority of their clients tend to be more of like the luxury market. You could call them, like, I wouldn't want to say ultra high net worth, but you know, upper middle class to rich, right? I think we could say that. And I think I read a statistic. About 37% of all Toll Brothers home sales are 100% cash. So think about that. Almost 40% of Toll Brothers home sales are all cash deals, which means that the wealthy people in America, they're rate insensitive, right? They're not sensitive to these rate hikes. So if you're looking to buy, you know, $1 million, multi-million-dollar oceanfront property in Miami Beach, you know, you're probably not going to be taking out a 30-year fixed rate mortgage for that, right? In many cases. In some cases you would, but in many cases, if we look at the data, it seems to be that rich people are just buying things in cash. So maybe as like a pair trade option for anybody who's running like a long short portfolio, maybe you would go long like a Toll Brothers and go short one of like the dealers or something like that, or like a broker. Because if home sales are going to be declining, that means commissions at a lot of these brokers, or these real estate brokers, are going to go down, but maybe you would have like Toll Brothers earnings stay consistent or go up because their client base is not going to be impacted as much by rates. So what do you guys think about that? But check this out. This is the Empire State Building. We are here at the Flatiron Building. And these color scheme is lit up for Juneteenth. Who Dat Dave says, that speaks volumes about the distribution of wealth. Go and look at the average net worth versus the median net worth, and you will see how skewed the wealth is towards the ultra rich. Yeah, Dave, I think you hit the nail right on the head, my friend. You're 100% right in that. Henry Sosa is here. He says, hey brother, thanks again so much for the live walk through Washington Square. I haven't been there in 52 years. You are the best. Spike Sousa, artist from Old Naples, Florida. Hey, well, thank you for saying that. Yeah, Washington Square Park was beautiful tonight. A little less busy than yesterday, but definitely was beautiful nonetheless. Matthew, let's not speculate on my net worth. It's because it's one thing if I'm doing videos, in my house, but I'm out in public. Ryan says, ooh, Toll Brothers average home price is $864,000. Yeah, so I guess I'm right. The Toll Brothers tends to lean towards upper middle class to more wealthy buyers, I guess. Sunshine After Rain, good to see you. Hey, Fox Tech 106 says, hey Tom, good to see you, Fox Tech 106. James says, all cash equals corporations or institutional investors. Billy says, opportunity often comes disguised in the form of misfortune or temporary defeat. Napoleon Hill. Very good quote, Billy. Mystery Girl says, do you think right now prices on houses coming down? It's a good time to buy, then refinance when rates come back down? Yeah, so I think my take on housing is going to be very different from the vast majority of people. And the reason why I think that is because a lot of people will try to time the housing market because they're essentially running the numbers based upon what they can technically afford, and I'm doing air quotes here, afford based on the minimum payments or the monthly payment on that mortgage, right? So if we think about it like that, many people will say, oh, I can afford mortgage payment with the taxes and insurance about $2,000 a month. That's what I could afford. So I'm going to buy a house based upon those metrics. I think that's the complete opposite way to look at it, in my view. You really got to look at you got to look at your own personal finances, and you have to say, don't buy a house based upon if you could afford the monthly payment or not. That's definitely a recipe for disaster in many instances, because just because you can afford the monthly payment doesn't mean that you're not going to be what they call house poor. So even many of my friends during this cycle, they levered up on a house and said, oh, I could afford the monthly payment. The monthly payment's going to be $3,500. I'm like, oh my gosh, $3,500, that's a jumbo mortgage. But they're like, yeah, I could do it because it's going to be me and my wife. It's going to be no big deal. But you're just barely scraping it by, right? You don't want to be like that. God forbid one of you lose your job. Then you're in big trouble. That's how homes go back to banks. What you should do is you should say, okay, how much cash do I have? How much debt do I have? And assuming that I lose my job for an 8-month duration, would I still be well capitalized enough to make the payment on the note? And if the answer is yes, then that is your price range. If the answer is no, you're out of your price range. I would also look, especially if you're a first-time home buyer, I would also look to buy a single-family home in a market that is very good for short-term rentals. So the renter laws are very good towards short-term rentals. So let's say if you hit an economic downturn or something like that, you can maybe put your house on Airbnb and rent out the spare bedrooms, in which case you can actually now turn your house into an income producing asset. Or maybe you just want to buy a duplex or a triplex or something like that. But don't just say, oh, I can just make the monthly payment, then I could afford the house. It does not mean you can afford the house. It does not mean you can afford the house. I think that's how a lot of people, unfortunately, can get very, very hurt. So to answer your question, what I would do is I would sit down one weekend, grab a cup of coffee, write down what your income is, write down all of your assets, list all of your liabilities, what comes in, what goes out, and then based upon those numbers, I would say, can I put comfortably 25% down on this property? And God forbid I lose my job for 8 months, because on average it takes a person 8 months to find another job from when they get fired or laid off or quit. Can I still pay the mortgage payment? And if the answer is yes, I think that you could probably afford it. James says, never lever up to buy a house. Good to see you, James. CT says, keep up the good work. Love the city views and the intelligent commentary. Thank you, CT. Hopefully you are having a good Father's Day and a good Father's Day weekend. Everybody's pretty much off tomorrow, I believe, too. Billy says, Tom, the best advice I give to younger people or average people trying to buy a home is get creative and learn wholesaling to help. It only takes one person or deal, says Billy. Interesting advice. Thank you for that, Billy. I appreciate it very much. I'm sure everybody else does too. Kirby says, is your primary residence an investment or liability? In my case, it is a cash flowing asset. I think many people, if they just buy a house and then they just live in it, it's not generating any cash. I think that borderlines on speculation, right? Because I understand as you're paying down the note, it's sort of like a forced savings mechanism, right? Because every time you make a mortgage payment, theoretically, you build equity in your property, but it's not throwing off any cash flow. So that's why I always say maybe, if you're in your early 20s and you could afford to sacrifice a little bit, maybe you house hack where you live in one of the rooms and then you rent out the other rooms, and now the tenants are paying your whole mortgage and the property's cash flowing a little bit. Or you want to do short-term rental. Or maybe you knock down a couple walls, build another wall, build a kitchen, build a private entrance, and then you make it a legal two-family, and then you can rent it out. Or you could just buy a duplex. I think that your first home, in my view, and I get everybody's situation is different, and I tend to think a little bit more crazy than most people. Your first home purchase should be either a single family home that you use primarily as you have one bedroom that you live in, and then you either Airbnb the other ones for cash flow, in which case you're not even paying for your home. Or you buy a duplex, in which case you live on one side of the home, you have a tenant living on the other side of the home to subsidize that cost. And then as you get older and as you build your net worth, then you can buy your own home. And because it's like a luxury, right? So as you sacrifice, the more you sacrifice when you're young, usually the easier it is when you're older. Because in that instance, let's say you put 25% down on a property and the tenants pay off the entire property. Well, how much did you really pay for that property? You only paid, what, like 100 grand for a $400,000 to $500,000 asset? It's a pretty good trade-off. Roland says, habla de español un poco. Hola, Roland. Eric 20 says, what are the trends for jobs and inflation looking like for now to the election? Well, the job market is slowing down a little bit. I believe on Thursday we get jobless claims data out, I believe. And well, the unemployment rate right now is what, 3.4%? The unemployment rate is at the lowest levels in history. That is an absolute fact. But I think it's important to really look at the, besides the unemployment data, I think the most important thing to look at is the participation rate, the labor force participation rate. We're getting a lot of spam tonight, guys. Hey, Michelle Henry says, hey, Tom, good to see you. Welcome. Oops. Oop, my chat just went crazy. Who do we have here? Nicholas Duro says, Tom, have you watched Stranger Things yet? I have not watched Stranger Things yet. Not yet. Hey, Karura says, hey bro, I love your city. I tune in every day. Thank you so much for tuning in. I really appreciate that. I really, really appreciate that. Hey, Dolly Girl Twins, good to see you. But Eric 20, yeah, I think, you know, the job market is going to get progressively worse. If you read the Behind the Street newsletter, I think this was issue number 15. I said that the time, so issue number 15 was probably what, 4 months ago? I said, I think the window is closing where you can really negotiate a high salary. I think now is the time to really sit put and stay put, especially if you have a job. I wouldn't go looking for another one right now because you never know what the sort of the economy is going to look like. But we're going to get that data out on Thursday, I think, when jobless claims are going to come out. Nirvana Fan says, is Airbnb good to use? Yeah, I've used it. I think it's pretty good. But the only thing about that is you really need to make sure that whichever jurisdiction you're in, you have to make sure that the laws are friendly towards short-term rentals. Because in some markets, especially in markets like Miami Beach, you're not allowed to rent things out on Airbnb. In many subsegments of the Atlanta, Georgia market, you're not allowed to rent property out on Airbnb as long as it's your primary residence, things like that. So I think if you're going to make an investment into a short-term rental or an Airbnb, you really need to make sure you know the laws within your local market. It's imperative because let's say if you purchase a property and it turns out you're not allowed to rent on Airbnb, now you're stuck with a house, right? So to answer your question, I think it's great. I think that a lot of regulators get Airbnb very wrong. I also think that a lot of people abuse Airbnb. But if you look at the average listing on Airbnb, from the data provided from Airbnb, the vast majority of people that are actually putting up listings are people that are nearing retirement. They may be in retirement, in which case they are putting a spare bedroom or two on Airbnb to help supplement their income in retirement. So I think in that sense, it's a fantastic thing, Airbnb. It helps a lot of average people, number one, afford to stay in their homes during retirement, but also helps a lot of young people able to acquire a property. So in that circumstance, I think Airbnb is fantastic. But just like anything, there can be people that abuse it, that'll go up and buy 20 million, 60 million houses, or what they'll do is they will rent a bunch of apartments in the city and then sublet those apartments on Airbnb, and that's greed, right? And unfortunately, the people who get hurt are just the average everyday people that may have a house or may have one or two investment properties, in which case they rent out the spare bedrooms on Airbnb to supplement their retirement income. Those people are the ones that take the fall for all these people that are abusing it, which is unfortunate. But I think Airbnb is a fantastic thing, especially if you're young You know, if I was 19 all over again, I would take all the money I have saved up, I would put a down payment on a house and Airbnb out the spare bedrooms. And, you know, by the time you're in your early 30s, you have your whole house paid off. Hey, Ryan Royals, Tom, I read that some renters on Airbnb are made to clean the people's house. Really? No way. That doesn't sound right. Maybe they'll have to pay like a cleaning fee, but I didn't hear they have to clean the house. It's a little strange. Sabrina Fair says, I don't like Airbnb. Nakos says, hey Tom, good to see you, Nakos. Hopefully you're doing well on this Father's Day. Eric 20 says, do you think this round of earnings are going to be concerning? I do. But I think it may be short-term pain. And I think that goes back into what we were talking about before, about the forward PE on the S&P 500 being 15. But if earnings come in this earnings season revised down, or they're even missed, you know, it's very possible that the forward PE ratio on the S&P right now is actually 19, which would be a little bit out of historical valuation range. But I think you're going to see a little bit more pressure. But I think as a couple quarters roll by, hopefully supply chain issues will subside. And the reason why I'm so focused on supply chain issues is because when we heard from Target and we heard from Walmart, the biggest thing that they were talking about in terms of their gross margin contraction was because of supply chain issues. An inventory buildup of supply chain mismanagement, in which case they'll have to take severe markdowns. But check this out, everybody. This is a beautiful view of the Empire State Building from Koreatown, right here on 32nd Street and Broadway. Beautiful. Somebody says, hey Tom, are you going to Miami? Yes. So there will be no stream, there will be no live stream tomorrow, unfortunately, everybody. But I think that's actually makes sense because the stock market is closed tomorrow, so the US equity markets and fixed income are both closed tomorrow. I will be traveling the majority of the day tomorrow, so there will be no live stream. I will be traveling, I will be in the air, but we should be back on Tuesday. We should be back to our regular scheduled programming on Tuesday, but if not Tuesday, definitely Wednesday. But I will be traveling all day tomorrow, so unfortunately there will be no stream, but good question. Hey, Kirby says, should Airbnb have same safety regulations and inspections as hotels? I don't think so, because they're your personal property, so I don't think they should be held to the same standard as like a traditional hotel, because they're offering very different services, I think. But that is a good point, and I think that's what a lot of regulators are debating right now, especially in local municipalities like Miami market, like Miami Beach market specifically. New York also is a huge, they're in huge litigations with Airbnb. Nirvana fans is true. Wouldn't you dislike it if your neighbor's house was just Airbnb, having random people in and out? Well, I don't think the neighbor's opinion matters, right? I mean, it's you own your piece of property. You can do whatever you want with it. I think just as long as you don't abuse it and have people that are throwing parties and things like that. But if you're a responsible adult and you just have people in and out and they're respectful, because some people post on the Airbnb that, hey, if you pay a little bit more, you can throw parties and all this stuff, which I don't think is right. But I mean, you make a good point. Yeah, James says New York buildings won't let you do Airbnbs. Well, there was a couple of years ago, and I think this was near the new Hudson Yards development. What people were doing is they were renting units and then subletting them on Airbnb. So they were renting units. Let's say they would rent a 2-bedroom apartment for like $3,000, and then they would Airbnb those individual bedrooms in the apartment to make, let's say, $6,000. And they did a huge crackdown on that. So that is definitely not a good idea. Don't go renting a bunch of apartments and then Airbnb-ing those apartments. That is definitely a big no-no. Because obviously, everybody, these people were not getting approval from their landlords to do this. I mean, obviously, but yeah, James is like, Airbnb is good for vacation homes. You know where a good spot for Airbnb is, James? In upstate New York, right near like the Catskill Mountains. Because you can buy like these little cabins in the woods that are actually quite nice places. And you can command like $300, $400 a night and do pretty well. I actually have a friend that does that up there in the Catskills. But right now, everybody, we are across the street from Macy's. This is Herald Square. This is 34th Street and Broadway. So I think we're actually going to walk up 6th Avenue because we always usually walk up Broadway. So I think we're going to walk up 6th, in which case you'll see Bank of America Tower right here. We were talking about Bryant, which is the CEO of Bank of America. And one of the interesting things he said, and we covered this in last night's stream, is that he is not seeing consumers spending go down on credit or debit cards that are backed by Bank of America. And he actually said that bank account balances in both checking and savings accounts at Bank of America have reached all-time record highs or new all-time record highs. So that begs the question, how is the consumer really, really hurting here? And which narrative do we believe? Interesting thought. This guy has his bass so loud. I'm not sure if it's this guy or the next guy. I know, Gregory, the bass is interfering with, the bass is like blowing out my eardrums right now. Yeah, so sometimes these guys will drive around with their bass absolutely cranked. And you know what I always think about? Like, if my ears are hurting and I'm a couple blocks away from the car, I mean, the person who's inside the vehicle must have his brains absolutely blown out. I don't know how they cope with that. They must wear like ear protection. Hey, Line Sync, thank you so much. Good to see you. Nako says they have to let you know they're listening to music, yeah? Nirvana fan says Tom is an AI walking. Well, you know, oftentimes on the stream we'll have people that claim we're actually not really live streaming, that it's just me like doing a voiceover on a walking video in New York, which is actually kind of clever, to be honest. It's actually kind of clever. I never thought about that. Hey, Christina says, if you really want to freak out a kid, say hi to my son Joseph. He doesn't know about the live chat. Well, Joseph, it's good to see you, my friend. Hopefully you're doing well, and hopefully you'll be able to join in the streams very soon. But good to see you, Joseph. So maybe we'll just be able to make it to Bryant Park before it closes. I'm not sure what time it is. Maybe we could do a quick time check in the chat. But hopefully we'll just get to Bryant Park before it's closing so we can check out the lawn. But as always, if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe if you are new. We usually do these live streams about 5 days a week. 10:40. Hey, Roy is here. Says happy Father's Day, Tom. Good to see you. Hopefully you're doing well. Hey, Tara says, I am new to the chat. Do you straddle between New York City and Miami every week? Not every week, maybe every other week. It just really depends on meetings, my meeting schedule, if I have meetings in New York, if I have meetings in Miami. Sometimes I'm in Philadelphia. Everybody, I wanted to bring about one piece of data that I think is extremely important to take into consideration being in the housing market that we're in right now. So check this out. It says that payments on new mortgages topped 23% of disposable income. That is close to the 26% of disposable income during the last bubble. And I don't think I need to tell you guys what bubble that was, the great financial crisis. So Redfin CEO says that demand was 17% below their initial estimates, and they're laying off about 8% of their employees. Because the thing about Redfin is they actually employ people direct. When like a Remax or something like that, they may be like independent contractors, right? So if you're a realtor or something like that, so you're really not going to get laid off because you're going to be an independent contractor. But at Redfin, they actually hire these people as employees. But I thought that was a pretty interesting piece of data. So as a percentage of disposable income, I think the golden rule is you're not really supposed to spend no more than 10% of your disposable income on your housing costs. In New York City, by the way, some people spend upwards of 30% of their disposable income on their rent, which is pretty crazy to think about. But payments on new mortgages just topped 23% of disposable income. When the housing market topped during the 2007-2008 financial crisis, that percentage basis was 26% of disposable income went to a mortgage. So here's how it may be different this time. And I know you're never supposed to say it's going to be different this time because it never is. But not for nothing, incomes are steadily rising at about 6% per year. And unemployment's at 3.4%. But then again, to play devil's advocate a second time, recessions always happen when unemployment's at its lowest level, right? A new recession doesn't start when unemployment's 10%, right? Recessions tend to start when unemployment's at its lowest level ever. So I just wanted to let you guys know a little bit about that. But check this out. This is One Vanderbilt, also lit up bright red, black, and green for Juneteenth, which is today, which will be observed tomorrow. So U.S. equity markets and fixed income are all closed in observation of Juneteenth. Zone says, would you buy a new house now or wait for the bubble to pop? I say buy a house in any market condition if you could afford it. You know, a house is not like a stock. You can't live in your stocks. You can't take a shower in your stocks. You can't cook a beautiful steak in your stocks. And you can't go to sleep in your stocks. So long as you can afford the house and the numbers work, so let's say if you're looking for a cash flowing piece of property, if the numbers work and the property cash flows, in my view, it's really irrelevant at whatever time you buy, because the goal with real estate is to acquire properties, multiple properties, over your working career, so that when it comes time for you to retire, you can live off of your rental income. And if you follow those principles, you'll never go bankrupt, because you're not going to fall into the irrational exuberance. You're not going to look at your friend and say, oh, my friend just bought a brand new 4,000 square foot house. I need to go buy a brand new 4,000 square foot house. No, that's all going to be irrelevant to you. You're going to say, based upon my income, based upon my personal balance sheet, to tally up all of your assets, tally up all of your liabilities, what is your income, and based upon those parameters, can you afford to buy that specific house? If the answer is yes, and the deal is going to cash flow, then buy it. If the answer is no and you can't afford it, then don't buy it. Right? I think housing is one of those very unique things that it's very tailored towards you. And even if home equity values drop short term, it's not like it's a stock where you're going to flip out and you're going to sell it in a day, right? You're going to sleep, you're cooking meals, you're raising your kids. So I think housing is very unique in that sense. So I wouldn't really use housing as a speculative tool, like how many people speculate in the stock market. Focus on your personal balance sheet, focus on your personal net worth, and focus on your personal affordability metrics is what I would say. But again, that's not advice, and I could be wrong, but that's the principles that I live by personally. But everybody, check this out. We are here in Bryant Park, looking over the beautiful Bryant Park lawn and the fountain. And if we pan up here, we could actually see the brand new One Vanderbilt building. Absolutely beautiful. Hey, it's just cameras as well. I know politics are off limits, but it seems Trump was right about the Biden presidency. Yeah, we try not to get too political. I mean, especially, I just want to kind of chill out. It gets the chat riled up, it gets people upset. Let's just kind of chill out, man. But good to see you. Good to see you, and happy Father's Day. Hey, King is here, says Tom. You absolutely rock, brother. You were a genius. Great stream tonight. Hey, thank you so much for joining in. It's just cameras like on my screen. It looks like a giant piece of toast. So check this out. This is the not brand new. It's the Bank of America Tower. But right next to the Bank of America Tower, it's the Salesforce Tower, which is enterprise software company. One of the first original SaaS companies, software as a service companies. Founder Mark Benioff. But the very famous Salesforce Tower is actually in San Francisco, which I really, really want to visit. Really, really want to visit. So this is the lawn, but it looks beautiful, doesn't it? You know, we were actually here streaming on the exact day that they were closing down the Winter Village in Bryant Park. Hey, Robert says, yes, Tom, come to San Francisco. Dude, we will. I promise we will. Yeah, so the only time, and I'll clarify this again, and we talked about it last night a little bit on the stream. So oftentimes on the stream, we will talk about political events. But again, this is coming from a standpoint of a financial analyst. So here's what I mean by that. So I think people need to understand the distinction of a financial analyst and a political analyst. Right, so let's say you work for the Washington Post or whatever major news organization as a political analyst. Your job is to analyze political events and then maybe give an insight on which particular policy is good or bad or ugly and whatnot, and then maybe make recommendations based upon that. A financial analyst, our job is to understand the current political climate, whether that be from the Republicans or Democrats, and say, okay, based upon this data that we have and on this political climate, how can we position our clients and ourselves to profit in this environment? We do not care, and this may sound harsh, but this is the job of a financial analyst, or if you're a PM or a portfolio manager, hedge fund manager, you don't give your opinion on what is good or bad. You say, based upon these set of economic parameters and political parameters, how can we best position ourselves for a portfolio? So whenever we talk about politics on the stream, maybe we'll be talking about inflation, we usually just state the core facts, and then we'll try to recommend or maybe talk about how to hedge or position our portfolio, or maybe we'll say, okay, maybe this pair trade would be good. Maybe you could go long oil and short consumer discretionary or something like that. What the financial analyst doesn't do is say, oh, Trump is right, Biden is right. We just don't care. Our job is to make the number at the bottom of our screen go up every year. So if you run $1 million, your job is to make that $1 million go up every year. You don't care about the politics. And I'm not saying that I don't care about politics, but from a financial analyst standpoint and from the stream standpoint, we just try to say, based upon the political climate, here's how we could best position ourselves. But let's say if you work for the Washington Post and you're a political analyst, then that is your job. Let's say if you work for the Young Turks on YouTube and you're talking about politics, well, then that's when you make your opinions. It's just not what I do. And I know a lot of people will email me. Sometimes they get a little bit upset after the streams. It's just not what I do. It's just not what I do. So hopefully everybody can respect that. But check this view out here. Hey, Perfect Storm says, why do all those hedge funds lose money then? Yeah, a lot of them do. I don't get your question though. Why do they lose money? Because they're underperforming the market? I guess. But this is the Bank of China right here. You know, speaking about hedge funds underperforming the market, huge hedge fund, Tiger Global, which is really renowned as one of the greatest, most successful hedge funds of all time, they're down 50% this year, 50%. Kind of crazy. You know, the clouds look amazing in contrast with the buildings here. Eric 20 says, if the Fed isn't buying treasuries on the open market, won't institutions step in? But would that money have gone into stocks? No, I mean, that's the thing, right? A lot of people are asking, look, if there's no bid in the market, right, if there's no bid, who's going to buy it? And I think that's $1 million question. You know, maybe now that rates are a little bit higher, oh my gosh, that rat literally ran right over my foot. Now that rates are a little bit higher, maybe the traditional 60-40 portfolio will work a little bit better. But to your point, back when the 10-year treasury was sub 3%, you know, why would anyone buy that? Because after inflation, you're essentially negative on the deal. That's a good point. Perfect Storm says, hey Tom, I'm from the school of belief that we should end the Fed. Yeah, me too. Me too. You know, I think you would really, really enjoy the Peter Schiff show. You know, I may not agree with Peter Schiff in terms of a trading methodology and investing methodology, but in terms of a true, straight economist, I think he's really, really knowledgeable and really good. So check that out. The Peter Schiff show is fantastic. You can get it right here on YouTube for free. But now we are approaching the Bryant Park Grill. This place looks really beautiful tonight. Yeah, James, you're right. So that is one of the big misconceptions about hedge funds. Many people say, well, hedge funds, you know, are underperforming the market, ha ha ha. Well, the way they're designed, inherently in their name, hedge, is to reduce volatility. So the people who invest in the hedge funds tend to be wealthy. And wealthy people, technically, they're not really trying to get wealthy. They're already wealthy. They're trying to just stay wealthy. So if you can have a dampened volatility by investing in a hedge fund, you know, you would be willing to pay, you know, the egregious management fees for that. But this year, you know, you're seeing many hedge funds blow up. Like Tiger Global is down 50%. You know, the S&P 500 is only down 23%. Tiger Global is down 50, which is insane. D. Woods, as a financial analyst, is the first and lowest job a graduate gets in the City of London. Yeah, so if you're working at an investment bank, that is usually how the hierarchy works. So you'll be an analyst, your associate, then a VP, and then a managing director. So you're right, 100% right. But wow, look at the skyline from Bryant Park. We're looking at the Salesforce Tower and looking at the Bank of America Tower. Really beautiful here. Hey, Sean says, hey Tom, have a good night. Looking forward to your live stream on Tuesday. Thank you, Sean. Hopefully you had a fantastic Father's Day weekend and enjoy your day tomorrow. If you have off, please enjoy it. Yeah, Luna Lee. There's a lot of rats here. A lot of rats in Bryant Park, unfortunately. So if you guys look on the Bryant Park camera, you could actually maybe see me here. But this is the outdoor dining setup at Bryant Park Grill. Somebody says, what's your email address? Can you share it? Yeah, absolutely. If you look in the description of this video, somewhere down here, it should have my email. It should have my email there. But I usually respond faster on direct message on Twitter. So if you want to send me a message or a DM on Twitter at Walks Wall Street, feel free to do that. But if you just look in the description of this video, my email is definitely there. Feel free to send me whatever you want. El Greco says, what is your job title? I am in enterprise tech sales. Enterprise tech sales. So I guess you could say enterprise account executive if you want, or enterprise sales director. And this is the Bryant Park Hotel. This is really a unique building too. So inside the Bryant Park Hotel, or in the same building I should say, is actually a community college. And it used to be called the New Community College in the City University of New York system. I was actually going to go there, by the way. I was very, very close to going here. But then I think it was bought or something. I think it's the Gutman Community College. I believe it is still in the CUNY system. So CUNY stands for City University of New York. So I believe in the community college system you have BMCC, which is the Borough Manhattan Community College. You have Hostos, which is also in the Bronx. Hey, Snarky Traveler says it's pretty sad that politics have EV elves for working towards a common goal to beating the other team, other than trying to always be right. Yeah, I think, politicians just want power, right? Wow, everybody check this out. Look at all these trash bags here. This is literally like a wall of trash. That's insane. Hey, the RT440 says, hey Tom, I saw you walk by the Bryant Park webcam. Nice, dude. Yeah, I am wearing a white t-shirt, you're right. So sometimes I'll walk out of this, I'll work out of this WeWork office right here, which is really, really beautiful. So if anybody has a WeWork pass, I would definitely recommend working out of this WeWork at least once, because the architecture in there is really, really incredible. Really, really incredible. Yeah, buy the books, like so much trash. I know, it's insane. Well, then again, to be fair, I think it is garbage day tomorrow. Excuse me. I think it's garbage day tomorrow, but the garbage may have piled up a little bit higher than usual, because tomorrow is a holiday. So I do not think sanitation will collect tomorrow. At least I don't think so. James says, I took some classes at Baruch. Very nice. So that was my original first choice. I wanted to go to Baruch. I didn't get into Baruch College. Did not get in. It's Just Camera says, this is a good thing to invest in shared workspace in companies. I think it could be a thesis. But then again, I think they burn a significant amount of cash, and they also have a lot of debt for obvious reasons, right? Especially if they're leasing a lot of these places. So I think WeWorks may have went through a restructuring. Now, if you remember correctly, I believe one of the largest investors in WeWork is SoftBank. And SoftBank is a big Japanese conglomerate that is headed up by Masa's son, or Masayoshi Son, in which case he is also leading up the two funds. I believe they have two funds, one of which is the Vision Fund, which is a multi-billion-dollar fund investing into innovative technology, which is severely underperformed. Hey, Ed Dunkel's here. What's up, Ed? Says we crashed. Yeah, I think that's a thing on Netflix, isn't it? I know. Yeah, so I actually met Adam Newman. I think I told you guys that story. I was in the office with him the same night where the whole thing was coming undone. But here we are standing directly under the Salesforce Tower, ticker symbol CRM. Lifeline, I do. Oh, Ed Dunkel says the We Crash is on Apple TV. Copy that. Yeah, Robert says libertarians want to be left alone. You know, I was looking into this. You guys know me. I don't really like any politicians, like at all. But there was this one guy, and the only reason why I know about him is because he followed me on Twitter. Maybe he watches the streams. But Larry Sharp is his name. And I was looking into a lot of the stuff that he was talking about, and he's a sharp guy. Not for nothing, he's a really sharp guy. So I'm not sure if anybody's heard of him. Larry Sharp, he is a libertarian that I think he's going to run for governor again. But unfortunately, I don't think he'll have any chances of winning because he makes too much sense. But check this out. This is a beautiful view of the Empire State Building right here at the Salesforce Tower. You know, the clouds in the background really make this picture. It's beautiful. Somebody says I would have voted for Andrew Yang. Yeah, I like Andrew Yang too. He's all right. You know, I don't. In all transparency, I don't do any voting. I try not to get involved. The RT440 says, Tom, I like the way you dodge people walking on the sidewalk when I'm in Manhattan with my friend Anna. She doesn't know how to dodge people. Yeah, I like to, especially when we're streaming the RT440, I kind of like to stay away from people, honestly. Yeah, photos around New York's like iPhone is really amazing in low light. It is, you're right. Yeah, Dustin Cole's like punny one, yeah. I didn't even notice that until now, Dustin. Hey, two Harbros say, awesome, so glad I found this feed. Well, thank you for being here, appreciate it. So on this channel, we go live about 5 days per week in New York City and Miami, depending on where we are. We usually spend like 2 weeks in New York, 2 weeks in Miami, vice versa, depending on business. But we stream, we talk about the economy. Usually on the weekends, we do not have a dedicated topic. But during the weekdays, we do. You know, U.S. equity markets, fixed income markets are closed tomorrow. But we're going to get a slew of economic data relating to the housing market coming out this week, which we reviewed a lot of that data today on the stream. But all the data is supposedly supposed to come out not too good. Definitely some severe slowing in the housing market. Severe. Yeah, James says it's very quiet for this area. You know, I think over here is the national debt. Let's see if I could show you guys. I think it's right up here. We could actually see the national debt. Hey, Al Baker says, Tom, the mayor of New York City should address the trash problems. That has to be an unhealthy level on many levels. Yeah. I think sanitation does an all right job. But then again, I think everybody's off tomorrow for the holiday. All right, everybody, let's check out our national debt. So let's see how much I owe. You guys ready? All right, so my personal share of the national debt is $234,524. That's insane. So each person in America owes about $250,000, give or take. Yeah, Roy's like, national debt, not so bad. So let me ask you guys a question. If you had the option right now to say, okay, if my share of the national debt is $250,000, if I pay it right now, and will I have the option to just opt out and I don't have to pay anything else ever again? If the government came to you guys with that proposal, would you take it? I think I would take it. Because over the course of my lifetime, I'm probably going to pay way, way more than $250,000 in taxes. So if they said, hey Tom, if you pay, write us a check for $250,000, and then you're done, you paid your fair share, you don't have to pay us anymore, I think I'd take the deal. Because over my working career, I'm definitely going to pay way more in taxes than $250,000. So this is the NASDAQ studio. I think they film some CNBC, maybe like Squawk Box in here. Jared says, would not pay, they are liars. So we somehow found ourselves in Times Square tonight. Yeah, Colleen T is like, they'll change the rules. That's a good point. And there's really not much we could probably do to fight it. So here we are outside the NASDAQ. You know, I believe Investors Business Daily used to do their market wrap-up, broadcasting live from here. But I think ever since the News Corporation bought IBD, I think they film it out of the News Corporation, which would be like that Fox News studio. But I remember they used to do it right from here. I used to see the Investors Business Daily thing right here. Ryan Royals like, Tom, I know you hate Times Square, but the lights are nice. Yeah, I mean, the lights are definitely nice. I come here every once in a while. It's not like we don't come here at all. I come here sometimes. It's definitely a sight to see, especially if you haven't seen it at all. 100%. Looks beautiful. But if you guys enjoyed the stream tonight, feel free to leave a like on the video and subscribe if you are new to the channel. Somebody says incredible light display, but who pays the electric bill? It's a good point. All right, since we're here, I'll walk over to the hot dog stand, and I'll show you guys the other side of Times Square. I think they still have the ball, the Times Square ball, up, so you guys can see where they dropped the ball on New Year's. And you can see it. Doesn't smell too good here though. So if you look all the way at the top of this building, you can see it. I think the 2022 sign may be broken a little bit, or if it's just flickering. But who here in the chat, just curious, who here has off tomorrow? Because Juneteenth is now a federal holiday. So that means we get a day off tomorrow. So Juneteenth is actually today, but it is observed tomorrow. So stock market's closed, fixed income. So who in the chat is actually off? I'd be curious to see. Colleen, so pretty much everybody. Oh, Zone, you said you don't have off. So it's like 50-50. Oh, Priscilla's here. Here now, says I have off. Very nice. Very nice. Yeah, Emmanuel says Tom, banks are closed. Hey, Julie says work at John Hopkins. It's a holiday for us. Very nice. Well, enjoy your holiday. Enjoy your time off, please. Hey, David Seeley says I'm off. Very nice. Cindy says, I'm self-employed, I work every day. I respect that. I respect that too. All right, I'll give you guys one last shot and then we are out of here because the phone is about to die. James says I'm off because the markets are closed. Yeah, a lot of Wall Streeters are off for sure. So that's the thing. I'm not technically off, but all of my clients are going to be out of commission. So I guess I'm not really going to have much to do. Emmanuel says, will you be streaming from Miami? We should be. You know, I'm not going to stream tomorrow, everybody. I'm going to be traveling all day. But we will be back to our regular scheduled programming on Tuesday. So Monday, I think everybody just going to take off. I'm going to be traveling, so I think I'll just take the day off to relax. But we'll see you here back 8:30 Eastern Standard Time on Tuesday. But I think we're going to wrap up the stream tonight. It was a good stream. We did the market to look ahead. A lot of data coming out from the housing market. Markets are closed. Enjoy the day off, everybody. Happy Father's Day once again to all of the fathers in the chat. And we'll see you on Tuesday, 8:30 Eastern Standard Time. The 23rd edition of the Behind the Street newsletter will be out this Tuesday. So if you have not signed up already, please sign up. If you scan this QR code on the screen, it'll bring a link to the Behind the Street newsletter where I give my thoughts on not only the US equity market, but fixed income, emerging markets, all that good stuff. So if you punch in your email every other Tuesday, you will receive the free Behind the Street newsletter. And thank you, everybody. I think we have right about 1,200 people that are reading my work, so appreciate it very, very much. So we'll see everybody tomorrow. I mean, not tomorrow. We'll see everybody Tuesday. So Perfect Storm, thank you so much. Dr. Longus, 48, thank you. Happy Father's Day, David Seeley, Bedzita Lopez, Andy, Ryan Royal, Sunshine After Rain, photos from around New York, Sabrina Fair, Gregory, James, Mohammed, Brandy, Jason N, thank you so much. Al J, Appreciate you. Christian Wilson, it's just camera, thank you. A Prez Drop, good to see you. Roy, hopefully you had a great weekend. Iowa Oak, thanks so much. Much appreciated. Perfect Storm, Alex, David, Ryan, Colleen T. Buy the book, EBITDA, and to the Mighty Bull. Have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. Enjoy your day off, everybody. Have a happy rest of your Father's Day, and we'll see you Tuesday. See you later.